Hi, welcome to the Weekly Social, folks. Today we have Marc Enzi, and he's going to talk about FIRPA, which has been a hot topic, especially in our local market here. We have a lot of foreign nationals that do investing. So, Marc, welcome. Hi.
Hey, Richard. Thank you so much for having me. I really appreciate being on here with you and your whole audience. This is a great experience getting in here and talking about the Foreign Investment Real Property Tax Act. So before we get going, I got a couple of things for you.
Oh, okay.
So you being a broker and a realtor, these explain what that is.
Okay.
And then just came back from an American Land Title Conference, American Land Title Association, so we got this cool iPhone holder, .FIRPA.com, and also got a cool USB charger.
Wow.
So these are for you, so thank you so much for having us.
You're the best.
And then, so we're going to talk a little bit about FIRPA, the Foreign Investment Real Property Tax Act. So realtors, this affects you, and
especially on the buy side.
it can go well or it can go badly. Okay, and so you really don't want FIRPA to be a surprise, because FIRPA has been around since the 80s. It's a law, it's a tax law, the Foreign Investment Real Property Tax Act. And simply stated, what FIRPA does is, foreign people were coming to the U.S., they would accrue some tax liabilities, maybe they wouldn't pay their taxes, or they'd buy property, be a rental property, they'd rent it for a while, it would appreciate in value, they wouldn't declare the rental income, and they'd sell the property, they'd pocket 100% of the proceeds, and then they'd leave the country and say, catch me if you can. Well, if you or I did that, the IRS knows where we live, they know where we bank, and they're gonna find us, right? They can catch up with us. We can't get away with that. So to close the loop on this, the government came out with this one size fits all that doesn't really fit anybody, and it's not very convenient either.
And it punishes the other side.
Yeah, and so what FIRPA does is, simply stated, it makes the seller leave a 15% deposit behind here in the United States. And that's 15% of the contract sale price, not of the gain, not of the equity, not of the mortgage, it's not of the net proceeds.
Total
15% of the contract sale price has to be left behind as a deposit, and the IRS makes the buyer the person responsible for holding that money back. So if you think about that, the buyer is responsible, meaning if it doesn't happen, the IRS is going after your buyer. So if it's a $500,000 sale, $500,000 times 15%, that's $75,000 is the deposit. Even if they bought it for $600K and now they're selling it for $500K, there's a $100,000 loss. Don't care. Contract sale price $500, 15%, $75,000. The buyer's obligated to hold back 15%, $75,000. So let's say there was no mortgage, right? There's no closing costs, there's no realtor fees, no nothing. It's really simple closing. Well, the seller's not getting $500K. The seller's getting $425. The other $75,000, title company's going to print a second check. That $75,000 is going to be made out to the U.S. Treasury, and the IRS is going to cash it, put it on account, and then once seller files a tax return to report the property sale, then they're going to sort out, is there any tax due or any other unsettled tax liability. Net of unsettled tax liabilities, seller gets their money back. If that money doesn't go in within 20 days, the IRS is going after your buyer, and the buyer is going to be held accountable for that. If it goes in a day late, they're going to nick them for 5% of the amount that should have gone in. So on day 21, on $75,000.
So now it's 20%. Is that what you're saying?
No, 15% has to go in within 20 days.
Okay.
If I said 20%, that's I misspoke.
No, it's 15, but if they nick them 5%, is it 5% of the 15%?
Yeah.
5 additional percent of the sales price.
No, it's 5% of the 15%.
Okay. Got it.
So on day 21, if it's a day late, right, that's where the 5% per month and every 30 days thereafter penalty kicks in, and they're going to be nicked for an additional 5% on the unpaid tax, right, the undeposited money. So if it's $75,000 was supposed to go in, but didn't, 10% easy, right, $7,500. Well, half of that is the 5%. $3,750
on top of
is going to be the penalty on day 21. Now that's the penalty. Now there's also interest. Right now I think interest rates federally are running at 8% is what the government's charging on late payments. And then that's going to accrue every 30 days thereafter. So if it's not, doesn't go in until day 21, but it goes in day 31, right? Now you're in your second month. Now it's 2 months, right? So now you're at 10%. And it's going to keep accruing. Plus there's an interest on the unpaid deposit, plus there's interest on the penalties. And so this whole thing snowballs. So on 75K, usually if just nobody knew and this was undiscovered until the following year when the seller files their tax return. When seller files their tax return to report the property sale, that's usually when the IRS discovers this, then they start sending out inquiry letters to title. And then the title says, well, yeah, this was the buyer, and then the IRS sends the buyer an inquiry like, hey, where's your FERPTA paperwork? And, no, I don't have any. Well, here's your penalty. And it's huge.
You can hear that out. That penalty goes to the buyer.
Goes to the buyer,
So
yeah.
It has to be structured, and it has to be disclosed.
Yeah.
And as a listing agent, that puts us in a precarious situation, Mark.
Well, if you're a realtor in Texas, I can tell you, I know it's in the Texas Association of Realtors puts out a listing agreement, and it's in paragraph 21I.
Yes, we do ask those questions.
Yeah, so it's in there. So the realtors, and I get a lot of good realtors who are aware of it, and then I also get a few who might be new or they haven't come across this ever, and this is a surprise. Okay, having FERPTA be a surprise at the closing table is never a good thing, but it's not the worst time to discover FERPTA. Okay, it's not a good time. I'd say it's probably the third worst time. So there's worse times to discover it. The second worst time is 21 days after close, because that's when
everything starts hitting.
When the penalty kicks in. The absolute worst time to find out that FERPTA applied was when your buyer calls you saying, hey, I got a bill from the IRS for $150,000. What's this all about? Right? Because their first call is probably to the realtor. Next call is going to be the title. And third call is probably going to be to a lawyer.
Oh, sure.
And so, now, if you should ever have one of your clients call you about FERPTA and they got a penalty notice, call me. Because a lot of times we can get this sorted out fairly quickly. Believe it or not, you know who's responsible? Nobody's going to guess this. Maybe somebody out there will. But you know who's responsible for the majority of FERPTA penalty notices? Who's the causal party? It's the IRS. Yeah, they don't associate the payment with the FERPTA paperwork. The two get separated, and then the dumb IRS computer says, no payment, must send penalty notice. And then the poor buyer gets this administrative penalty notice for insane amounts of money. It's not like for 50 or $100. It's, for $50,000 or $100,000.
Right.
And the poor buyers just flip out. Can you imagine you open your mailbox, Department of the Treasury, Internal Revenue Service, you owe $150,000. Make your check out to the U.S. Treasury, you pay it within 20 days.
That would be a peel them off the ceiling.
Oh my gosh, they flip out. I wouldn't want somebody with heart trouble to get that.
Oh gosh, no.
So the point is, it's very manageable. Okay, the ways that we can solve FERPTA problems from the get-go are to ask the question early. It's in the listing agreement. Some realtors don't want to ask the question like, hey, are you considered a U.S. tax resident or are you considered foreign? It's in the listing agreement, gang. It's going to come up at the closing. It's not that it won't come up. It will come up.
While we're on this topic, for clarity purposes, there is foreign nationals here, but they have TIN numbers. They do pay taxes.
Uh-huh.
So if they have a TIN number and they pay taxes and report the income, they do not have to do FERPA. Is that correct?
Okay. Yes. So if they have a tax identification number, that the tax ID number is not determinative. It's a fancy word. It doesn't decide whether or not FERPTA applies.
Okay.
I can have somebody who has a Social Security number and FERPTA still applies. I can have someone with an ITIN and maybe FERPTA applies, maybe it doesn't. Okay, the tax ID isn't the deciding factor. Here's why. I can have somebody come to the U.S. on, say, a 5-year work assignment, L1 work visa, intercompany transfer visa. Say they work for British Petroleum Canada and they got transferred to the U.S. They work here for 5 years. Well, it's a work visa, so So they can go to Social Security Administration, get a Social Security card. Got a Social Security card, okay, great. Go get some Texas driver's license, great. So you're on an L1 visa, it's good for 5 years. Wonderful. 2 years in, oil and gas takes a hit, slows down. So they close that division at BP. And they tell them, hey, look, your position in the U.S. is closing, but we've got a spot for you in Singapore. So if you want to continue to work for this company, pack up and get moving. It's like, but I got a house. I got kids in school. Don't care. You want to continue working for this company, your job's in Singapore.
Right.
Get going. So,
and reload happens all the time in our local market.
Okay, so yeah, they're getting relocated. So packs up the house, they move off to Singapore, they go, they try renting the place out. But they didn't put a lot of time into this. They didn't do a good job, getting the right person to help them rent the property. They tried doing it themselves. So they got a renter, and they're like, oh yeah, the owners are gone, and they can't make me pay the rent. Right. And we're going to not pay the rent. We're going to spend the money on parties. We're going to throw some wild parties. So they're not cutting the grass. The HOA is upset. They're getting notices over in Singapore that the grass isn't getting cut, and they're having parties, and cops are getting called. And finally, they're like, you know what? They're not paying rent. Just forget about it. They call a realtor. They call you. They say, hey, sell that place. I don't care what condition it's in. Just get rid of it. So you go over there. You look at it. And, well, they bought it for $600,000, but the place is kind of torn up. There's some holes in the wall. The pool's busted. The pump's not working, and they don't want to spend money on getting the place fixed up. Like, okay, look, I can sell it as is today for $500. Okay, great. So they put it on a market. They get an offer. They accept it. And the Canadians are going to fly back for the closing. Great. So they fly back for the close. They speak perfect English. Not that that's a test, but your only clue that they might not be from around here is they're wearing some hockey jerseys. They're super into hockey, and they say "hey" a lot, right? And so you get to the closing, and they slide across the table, paragraph 20 of the truck contract, sign this certificate of non-foreign status, saying I'm not foreign. Canadian says, well, I do have a U.S. work visa that's not expired. I do have a Texas driver's license that's not expired. I do have a Social Security number that doesn't expire, but I am a Canadian citizen and a Singaporean tax resident. I live and work in Singapore. I'm not a U.S. tax resident. Even though they've got a Social Security card, Texas driver's license, they even have a U.S. entry visa that's not expired.
Wow.
Foreign.
Yeah. Okay.
15%. They bought it for $600. They're selling for $500. There's a loss. They still have to have 15% withheld on the contract sale price. And if that doesn't happen, your buyer is going to get nailed for it. So, and believe it or not, you know who else is sitting right there next to the buyer when it comes to penalties? It's the realtor. The realtor is also on the hook for failure to withhold, but it's limited by the regs to the amount of the realtor's commission on the file. But the realtor is not the go-to with the IRS, but eventually, if the penalties are assessed and affirmed, then the IRS also starts reaching out to the secondary parties, and they go to the realtor for them as well. So you don't want this to happen to you. Now, the reality is, a lot of times we can mitigate this. Okay, let's say FERPTA was supposed to happen, but it didn't.
What if you asked all the questions and they checked all the boxes and answered everything, unbeknownst to the seller and the listing agent? And I'm just asking.
Okay, so if there's a compliance failure and they just didn't know, right? And they breeze past the paperwork, and they're shoving all the paperwork in front of you, and here, just sign here, here, and here. So you're signing, you're not reading.
Well, the buck should stop at title.
Yeah.
As well.
So
if you ask the question at the agreement, and they go, "Oh no, I have a social, I pay my taxes."
By the regs, okay, the title company, the settlement officer, is not responsible for FERPTA.
Okay.
The one who's responsible ultimately is the buyer, and to a lesser extent, the buyer's realtor's liability is limited. And those are the ones who are really on the hook. Now, if there was something nefarious going on, right, there was a willful evasion here, let's say seller and maybe seller's realtor said, hey, you know what, we're going to hide the fact that seller's foreign.
That's not good.
Now, if that comes up, now there's willfulness penalty comes in. And the buyer's not responsible for that. Okay, if there was fraud, then that's not the buyer's problem.
Right.
Not the settlement officer's problem, not the settlement agent, not title, not buyer's problem. Okay, and all the buyer has to prove up is that, hey, I was misled. They lied to me. I've got the signed certificate of non-foreign status. It says that they're not foreign, and they put their tax ID number on there, and they gave me their mailing address. Now, here's things where it kind of gets amusing. I've gotten them before where the tax ID number is blank and the address is foreign, and they accepted this on its face. That's a tough one to argue when it comes to penalty negotiations with the IRS. But for the most part, I've had really good luck with penalty mitigation strategies. Oftentimes, there really is no tax due. So if we can prove up that there was no transferor liability, seller liability in tax, then if I can prove that up, then the only thing the IRS gets to insist on, they have to drop the penalty case because there was no unpaid tax. The only thing the IRS then gets to charge the buyer is the interest on the FERPTA deposit that the IRS didn't get to hold up until April 15th of the following year. And so, and that's not an inconsequential number.
No, for 8% on $100,000, that's $8,000.
It is, but remember, on $100,000, 15%, that's going to be $15,000 from. I'm sorry, on $100,000 in withholding. Yeah, so on $100,000 withholding plus the interest on that, that'd be a huge number. But if we can make that $100,000 go away and all you're left with is the $8,000, that's often a much more palatable number. And for some reason, and I don't know why, and this is going out to realtors, right? Yeah. Not the title companies. I mean, it's okay if title watches this. But a lot of title companies feel responsible. And I'm telling you, that's the best words I can come up with. Not a legal sense, but they feel like somehow they're responsible for this if FERPTA goes wrong. And so I've had many, many title companies step in and pay that interest.
Oh, wow.
Yeah. They feel like they failed the buyer. But, you read regs, it's not title company's problem. It's not title's responsibility. So if you get a title company that's doing that, count your blessings. But hopefully this doesn't happen in the first place. But FERPTA is much easier to sort out early in the process than later. Getting me to stuff that genie back in the bottle a year and a half later it's not easy. We do it though, but it's much, much simpler to cure right from the outset. And believe it or not, oftentimes people think sellers are foreign when it turns out they're actually not.
Yeah.
And so, and here's another mind-blowing one. If somebody's in the U.S. long enough, right, and it doesn't take very long to be in the U.S. to be considered a U.S. tax resident. Simply stated, once they're here the 183rd day, they're here the greater half of the year, once they set foot into that 183rd day, they're considered, they've met one of the elements of being a U.S. tax resident. Now, we still got to look at, are they behaving like a U.S. tax resident? Do they have a U.S. tax ID? Could be Social Security number, could be an ITIN, doesn't matter. But are they behaving like a U.S. tax resident? Are they filing a U.S. tax return? Are they declaring their income? Are they taking a treaty position, playing a closer connection to a foreign country? Right? Or are they here on some sort of an exempt visa status? F1 student visa holders, they're by definition foreign. It doesn't matter how long they've been here. So there's lots of different factors that play into this. But here's the one that blows a lot of people's mind. You could have somebody come to the U.S. on vacation. They like it so much, they never left. They're still here. It doesn't matter how they got here. Okay? Point is, if they didn't come on an exempt visa status like F1 student visa holder or diplomatic visa or researcher, if they came here in the U.S., maybe they don't have any visa whatsoever, but they're here. If they've got a tax ID number, an ITIN, they probably won't have a Social Security number. If they have a tax ID number and they're behaving like a U.S. tax resident, filing U.S. resident tax returns, not claiming closer connection to a foreign country, not here on an exempt visa status, that person is going to be considered a U.S. tax resident and can be exempt from FERPTA.
Okay.
So we get those all the time, and it really blows people's minds.
Spinning plates and different rabbit holes that you can jump in and out of through this.
Yeah,
it's very complicated.
Yeah, my firm's one of the few firms in the country that handles this, and we do it well. We've got a lot of experience doing this. I'm not saying that we're the only firm can do this. We've got some colleagues in the business who occasionally come across FERPTA, and a lot of times they just don't want to deal with it. They'll hand it off to us. And we're happy to take that work on. So we've made FERPTA our niche. This is where we practice. This is what we do. and we've gotten really good with the experience and also handling unusual penalty cases. And so this is our craft, and this is what we're really good at. We like working with realtors. We like working with the title companies, and we do things often that I'm kind of surprised that we can pull this off. But we'll jump through hoops and make things happen. Sure. Like we had one this morning where realtors, do your clients a favor. Stay on top of this. Make sure the paperwork's in. Check with our firm. We had somebody made an inquiry. She sent us some stuff, but she didn't send us everything. She goes, well, I'm still waiting on a buyer. Okay. Well, we can't really do anything for you until we get a signed real estate sale contract. Fine. This morning, it happened this morning. This is the phone call that I was getting off the phone because I was dealing with them. Like, hey, we're at the closing and we don't have any of your paperwork. I'm like, what are you talking about? What's the name? I looked them up. I'm like, I don't even have a signed real estate sale contract. And I talked. You
don't know what the monies are or anything.
Don't have anything. I called my colleague. We told her to take the morning off and or take the day off, Good Friday, and she says, well, yeah, they never sent me the real estate sale contract. Well, they're at the closing. So I called title. I'm like, what do you need? And she told us. So we got it done and we sent it. And we made it happen, and so they can still close.
Closing's a lot of pressure on everybody.
Yeah. So you know what? It's not the seller's fault. It's certainly not the buyer's fault.
Right.
It's not the buyer's realtor's fault. I'm going to put this one on the listing agent. They didn't follow up with us, but they thought, oh yeah, first call, everything's taken care of, and no, it's not. You realtors, you know what? Here's my impression. What you really are. Okay, you're very highly skilled, really important project managers. You don't have to know how to do everything. In fact, I don't think the good realtors know how to do everything. I think the really good ones.
I still learn every day.
Yeah, they have a Rolodex. And I'm kind of aging myself here. A Rolodex.
I still have one, Marc. You're not that old.
For all you youngins, it's just a whole bunch of business cards you put into this cool circular thing that you can just flip in circles and you can bring up people's business cards, right? It can hold 100, 200 different contacts and just roll through it and scroll through it fairly quickly. Well, now we have contacts. And so the really good realtors are the ones who know who to call, the right tool for the right job to get certain things done, whether it's a plumber, an AC person, home inspection, roof repair, or staging, or getting furniture in the place, curb appeal, just all that stuff. You all are terrifically placed to be a project manager. And if you've got all those different people in your contact list, and you've got your backup so you can call it, because sometimes that contract...
Add Marc to it.
Yeah, you've got that contractor who might be busy that day, can't take the job. Or maybe you got somebody who's been calling you like, hey, I really want to do some work for you. Give that one in waiting a shot and see how they do. But have that list of people ready to call and know who to call when you need something done. And when it comes to FERPTA, give us a call. We'll answer questions. It doesn't cost anything to answer questions. We'll talk to you. Call us 3 times a week. We don't care. That's fine. We prefer you call us rather than go charging off down some rabbit hole and then you find out at the closing like, oh, we need it today, and you didn't do it. We can still do it today, but it costs a lot more. And so rather than get an expedite fee, just give us at least 3 business days to work on stuff, and then there's no expedite fee. But
be proactive.
Yeah, the sooner you call us, I'd say the better. Because if we can talk to the buyer and the seller, we've got some really simple instructional videos that explain what FERPTA is, then they feel better about it. Now they understand, like, okay, this is a thing. Now, there's way more to a closing than just FERPTA. I just deal with my little paragraph 20 cog, right? But if this shows up and you don't know about it, it can derail your deal. It can kill the deal at the closing table. I call it the hidden deal killer. So if there's questions, please call us, and we'll get them all sorted out. Normally our fees are picked up by seller, rarely by the buyer, sometimes, but they're generally they're going to be just a line item on the settlement statement. Which
I've reached out to you a handful of times over the last year or two since I've met you, asking you questions, and he's always returned calls, and he's always given me great advice on how to handle stuff.
Okay.
So highly recommend that you give him a call. What's the best number for him to call you at, Marc?
So best number to reach us at, we've got a toll-free number, 877-568-1545. And I got you something else here, Richard. I got you I took all the different concepts of FERPTA that always come up,
Okay.
and I boiled this down to a one-pager for title companies and realtors. And on the back side, we got you a set of QR codes. And we can maybe put these up on the Facebook. But
Yeah.
these are links to the FERPTA explainer videos. They're about 3 minutes long. They're in English. We also have them in Spanish, Mandarin, and Cantonese. And these do a terrific job of just boiling down the concepts of what is FERPTA and why do I care to say a buyer or a seller. And they're really made for buyers and sellers, so you don't have to try and explain what I just sort of regurgitated here to you all here on the video. You can actually just put them in front of this video. It's a YouTube video, professionally done, and it explains what the concepts of FERPTA are.
Actually, I'm going to check that out tonight when I get on.
Yeah, so makes it all very simple and understandable. So,
Yeah, that's very good information.
so tell me what your impression of FERPTA is.
Let's put that up there in case somebody wants to scan it.
What's your take on this FERPTA stuff? You know, I see it from my end,
Yeah.
but what do the realtors think of this?
Well, anytime I take a listing, I always ask the seller, and I go over that. I go over the whole listing agreement with them so they have a full understanding. You know, some people just want me to email it and I'll call with questions, but I prefer to meet them face to face so that I can go over everything with them so that everything's clear. But if they read that paragraph, I mean, it spells it out in that paragraph, in my opinion, with the promulgated forms. But with that, I mean, if they go, I don't know, then I say time out, and then it's time to start making phone calls. Because I'm not one to decide whether, you know what I mean? That's something that I need to get them with people to help them. So that's where I would call you, real estate attorney, the title company. We all put our heads together to make sure that we can do this.
All right. The way I look at some of these contracts, you know, I try to put myself in the buyers and the sellers' shoes, and you know, what I'm going through, especially like if I go to the Apple store, right, and I download something from my iPhone or from the iTunes store, some app, you know, I have to agree to stuff, right? Well, I got like pages and pages of stuff. I'm like, look, I just want the MyFitnessPal, right? Because my guy at the gym is trying to help me lose weight, and I'm trying to work out, and we want to log everything. But I got 3 pages of stuff. I'm not reading all that. No, just take me to the end. I'll sign, click yes, agree, and move on down the road. Now, lawyers would probably cringe and go, oh no, that's a horrible way to do things. But we get so used to doing that. Then we get this, you know, multi-page contract with all this stuff.
Okay.
I just want a house. Where do I sign? You know, I just want to sell my house. Where do I sign? And so they sign off on it, but they don't really understand everything that's in there. Or maybe they understand some of it, but some of the stuff like foreign, I'm not foreign, I don't know anything about, I don't care about foreign, I'm not foreign. Well, but you're a buyer and your seller's foreign and this affects you. And so this is where the realtor's got to do their job and got to step in and like, okay, this is probably not on the buyer or the seller's mind, but I need to step in here and make sure that these things do apply or don't apply. You know, because you're navigating a minefield for your client because they don't know. It's just not their thing. They don't read this every day.
It's imperative that you know these documents forwards and backwards, and it's amazing how many people out there do not. And so whether you use our services or somebody else's, just please make sure that you have a competent realtor that truly understands the documents that you're signing and can explain every paragraph to you.
Right. Because once they've signed it, gang, you know, remember the concepts of contract law, offer, acceptance, and valuable consideration. Once you're outside of that option period, money changed hands, both parties signed off on it. You know, you don't get to say, well, I didn't know about FERPTA, and I don't want to do this now. You know, it's not how it works. And I've had some foreign people tell me, like, well, I'm not going to have 15%, now the deal's off. Like, you don't understand.
The buyer has all the outs. The seller's only out is if they don't deliver the option and the earnest money within 3 days. And then you have to terminate the contract before they deliver that money. So if they delivered on day 5 and you didn't send that termination over to the buyer's agent, the contract is not valid. Now, I do not give legal advice. I have to put that disclaimer out there.
Yeah.
Please check with your broker. Please check with the real estate attorney. But I've learned that in class. It's been taught multiple times. That's where I got that information from.
So the point is that FERPTA is a part of the real estate sale contract. It's in there. You can't say, "Oh, I didn't know," because it's in there, right? And so it's one of those paragraphs that they signed off on. So, all right. Any other questions or anything else I can tell you about FERPTA?
No, I think you covered a lot of ground today. I think you brought some wonderful information for everybody out there, whether you're in real estate or just a consumer, because you could be walking into a transaction blindfolded, unbeknownst to you, and now you know that piece of information to look for.
Yeah. So I guess the big takeaway from this whole thing is, you're not expected to be an expert in FERPTA. Okay, you should just know who to call. If you call our number, we'll answer the question. It doesn't cost anything. We'll happily answer questions. We'll talk to the buyers. We'll talk to the sellers. We'll talk to the agents for buyer and seller. We'll talk to title. We'll talk to all the different parties. They've got lawyers. We'll talk to them. We're happy to talk to them. It doesn't cost a thing for us to talk to them. If we have to do work, right, we have to deliver something with our name on it, opinions, and generate documents, well, now there's an engagement. It's usually picked up by the seller, sometimes the buyer, and it winds up being a line item on the settlement statement. For closing docs only, if all they need is just the compliance to get them past the close, it's probably going to be in the neighborhood probably around $700.
Oh, that's very reasonable, especially when we were just talking about $100,000.
Yeah. Now, if they want to see their 15% back again, and they want to hire us to get them the money back, it's going to cost somewhat more. There's usually several tax returns if it's a husband and wife because they can't file jointly because they're non-residents. They won't pay any tax until they've got more than about $45,000 in gain each, considering what they paid, plus improvements, plus settlement costs, right, closing costs. And they have to have another $45K in gain before they see the first dollar in tax. So there's probably little, if any, tax on the deal. But getting it back from the IRS and getting the money moved from the FERPTA withholding agent account over to the seller's account and getting the money applied properly to the account and then recovering the money from IRS can sometimes be a struggle. So that costs more. So if we're going to do closing plus the recovery, now they're looking at total fees in the neighborhood of around $3,000, $3,500 or so.
That's still very reasonable,
Yeah.
sir.
And if it's been a rental property and they've been flying under the radar, not behaving like a U.S. tax resident, not filing U.S. tax returns, yeah, we're going to have to catch all of that up. And those returns, that deal can run $5,000, $6,000, $7,000. Because if they don't, the IRS is going to nail them for 30% of the gross rent with no deductions for anything as a non-resident passive income. And so they need to make that election to be treated like a U.S. trade or business. And they need to get those tax returns filed, and that's where we come in. So they think they're flying under the radar and they're getting away with something,
They're not.
but they're going to catch them at the exit.
Yep.
They catch them at the exit, and that's when the bill is due. And so it's not a good idea to do
Disclose, document, document.
Yep.
It's the D words.
Yeah, okay, good.
And those are very important in our industry.
All right, Richard, how we doing on time? Are we
We're
taking
good, yeah.
too much time here?
No,
We're
I think
good on time?
that's
Want
it.
to talk about anything else?
Just real quick so people know how to connect with you. What's the best way again, Mark, and the name of your company?
Sure. So Tax Solutions, FERPTA Consulting, and the best way to get hold of us is 877-568-1545. If you're in the Houston, Texas area, you can also call us locally, 281-578-1040. And a real simple way to get a hold of us is email us at info@tax, S like Sam, S like Sam.com. So taxss.com. info@taxss.com. Email us and we'll be happy to respond to you. That email will go to the entire team and someone will answer you right away. So either call us or email us. We're happy to help. You can also go to our website. We've just got a brand new website. We're just getting it up. It's called gotferpta.com. I think we got it here on
Let's put it
on our little iPhone holder.
See that real quick.
So www.gotferpta.com. That's our landing page, and that'll redirect you over to our regular website, taxss.com.
Right.
But we're happy to answer questions, so give us a call, and it doesn't cost anything for the call.
Perfect.
Look forward to hearing from you.
All right, we'll see you next week, guys. Thanks.
Thank you, Richard. Still going?
Yeah. There we go.